All right, folks, it's March 12th, 2024, and we have a session for you today. Bull market investing in a recession. What am I talking about? Well, it is very clear to me when you look at the details behind the data, behind the facade that the talking head pundits want to portray, trying to make us all feel warm and fuzzy inside. The reality on the ground for the Main Street economy and for the average family in the United States, and then obviously you're facing it outside of the US as well. Huge shout out to the global audience that we've now amassed. I appreciate all of your guys' support, and I'm looking forward to this one because we're going to be discussing what is a recession for Main Street, while Wall Street is having just the time of their lives, pumping this thing up and hitting the exits. This is a bull run that's taking place during an economic recession. They've covered it up, they've papered it over, they've manipulated the data, and even their own manipulated data is starting to bite them in the you-know-what. And so this has been entertaining to watch, folks. I'm really looking forward to this session. And like I said, all of our community resources are available at my website, zachrector.com. Without further ado, I'm going to get right on into tonight's episode because we got a lot to cover. So today was the CPI release, that's inflation, and we have higher than expectations for headline CPI and core. I'm going to get into that in a second. And as I warned our audience, we've been getting these bull trap rallies, these, on the shorter time frames. I'm talking about in the days leading up to the CPI release. We've been getting these rallies that have been taking place in equities and in crypto. And Bitcoin and crypto kind of leading the charge. And then we're starting to see the equities following behind. And we got that rally. We got that rally back up to about 73,000. Well, I can't say back up to, because that was a new all-time high for Bitcoin printed just last night, or in the middle of the morning, depending where you're at and when you're tuning in. We just hit 73,000 for Bitcoin in the past 24 hours. And that was leading up to that CPI release. And so as expected, we got that run up, and then we did fall off as soon as the news came out. And everybody, kind of got jolted by the fact that, inflation is still running hot, higher than expectations. Yeah, by the way, those PhD economics professors and the talking head pundits on CNBC, right? And all the forecasters, right, they were wrong once again. Go figure. And when they're wrong and when it offends them too much, then they just change the data points and change the equation completely. Now, I'm looking forward to talking more here about the inflation, but before I do, I want to show you that market activity that we've now seen play out, which was a little bit of a run up, 73,000 for Bitcoin, and then it crashed down to 68,600. I'll show you the charts that I'm looking at, but we have since recovered throughout the day. And so basically the long and the short of it is the markets do not care. That's why I titled this session Bull Run, right? Investing in a bull market, while we're also simultaneously in a recession. Let's take a look at it. Here is the Bitcoin chart, looking at our crypto to get this party started. Like I said, we went up to 73,000 in the middle of the night. Okay, just past 73,000 to go print a new all-time high for Bitcoin. Truly incredible to see. But then we did sell off right as that CPI release came out. The first couple hours and the futures actually, they dropped the CPI about 5:30 a.m. Eastern before the markets open. And so the futures start to react and that market opens up. We got a big sell-off, and this is for Bitcoin. And then we saw the same thing for Ethereum, both bouncing back up to nearly 4,000 for Bitcoin, Ethereum. And then for Bitcoin, it was back up to 71,400 right now. So quite the swing, and we saw the same thing take place for XRP, back down to 65 cents, just below 66 earlier today. And this is after that huge move that we got yesterday from peak to trough. It was about a 28% move for XRP. And, I just put out a quick little video before I fired up this session, and I said, guys, for folks that are asking, is XRP going to miss this bull run? I definitely don't think it is. And I think that you just got a little glimpse at what's coming, which is this coin. People forget about it. They discount it. They disregard it. And especially after what we've seen recently, right? Everybody is trapped in recency bias. That's all they can see. In front of them is the action that we've gotten on the charts lately. They weren't in crypto when XRP absolutely destroyed this space with some of the best returns of the 2017 bull run. Now, I'm not saying that it's going to have the best returns this bull run. I don't think it will. It's just I don't think it's going to miss it. I think it will go set a new all-time high. And I think that yesterday's price action was giving you a little glimpse, little sneak peek at what is coming. Now, the little brother, XLM, did follow along yesterday as well. That was a pretty big move there. Let's measure this one. How about that? A 20% pump for XLM. These coins will do that. They still have that capability in them, and the fundamentals just continue to get better and better for XRP and XLM, with the Stellar network getting smart contracts, already has the AMM cooking. And so the DeFi capabilities coming to both the Stellar network and the XRP ledger, fantastic. Flare did cool back off here below 4 cents. We're going to continue to watch that one, with XDC pumping this morning off of a partnership with Solidify. Our Discord member, Miguel, huge shout out to Miguel. He had shared that one with us. I had totally missed it. And I'll be reporting back on what that partnership meant. But it did go up to 6.5 cents there out of nowhere, kind of lagging behind both XRP and XLM. A little partnership announcement that was made at that time as well gave it that boost. For Algorand, back up to 30 cents. Stronghold, we're watching back down to 0.007. Solana pushing 150, stabilizing up here at this level. And I've been talking about, as long as Bitcoin stays here, we get to rotate and the altcoins get to play catch up. Here's the Say token. The token I already have traded out of and taken profits on. Dogecoin back up to 16 cents. So, we have the Mickey Mouse meme coin still pumping. Dogecoin, SHIB. SHIB did drop out of the top 10. Dogecoin still up there, I think, at the 9 spot. I think SHIB dropped down to 11, but definitely still up there. And the overall cryptocurrency market cap surpassing 2.6 trillion. Truly incredible to see, folks. So over 2.6 trillion. Remember that, when we look back at this overall space, it went over about 3 trillion is what it did during the last bull run right here. And so that's the overall cryptocurrency market cap, total market cap, all the way back here to basically peaked out right at 3 trillion. And see, what I was looking back here is there was a bull trap rally of 340% for Bitcoin, 328% for the overall cryptocurrency market cap before we had the March 20 breakdown, 70% pullback. And so I've been comparing that. Here we got 131% the last time I measured this. Well, we've well outdone that. 268% peak to trough from the bear market to where we're at right now. Already really incredible. And so the fact that this is taking place before the Bitcoin halving is exciting, right? So we got that bull trap rally. It happened much sooner, or it happened a lot longer. See, the Bitcoin halving was in April, I think May. It was in May of 2020. And so we got that run up towards the end of 2019. And then the second half of 2019, it had already started to break down. And then we went down 60% for Bitcoin in the second half of February into March. That was the March crash. It was 60% in 1 month. And so it brought down the entire space. And so we saw that happen before the halving, a couple months. And here we are just a couple months before the halving this time around, set to take place in just about a month, actually, just a little over 1 month. And here we have Bitcoin and the overall space rallying up here. Really incredible to watch this thing. But I've been warning, right? There's still warning signals that are going off. There's still economic data that, if you look at the details, is not very good. It's not very hot. What is still hot is inflation, which is also a massive problem. And another reason why the Fed is backed into a corner and why the Fed is going to struggle to cut rates anytime soon. We're still battling the inflation here. And let's take a look at it right here, folks. So this is what we got from the Kobesi letter. February CPI inflation rate rises to 3.2%, above expectations of 3.1. Same thing for core. It was at 3.8%, above expectations of 3.7. This is the 35th consecutive month with inflation above 3% and second straight increase. 2 months in a row that we've now gone back up. So we did not make it back below 3%, right? We got back down to about 3.1, I believe. And we have not been able to break below 3%. And now for the last 2 months, we're ticking back up. Now, this is the worst case scenario because what this is stagflation, where demand is falling off. Main Street's running out of excess savings. The American household is set to run out of excess savings towards the end of this month into April. And funny enough, this is when the backstop for the banks has ended just yesterday, BTFP coming to an end. And so this is why I'm saying, the U.S. household, the retail investor is out. The banks are, out, right? They're all concerned about Basel III. They were all telling the congressmen and women to make sure that they question Jerome Powell about Basel III, to make sure that, you sure about this one, Jerome? This is going to make tough for our banking buddies. Yeah, it will. It's time to tighten it up. It's time to clean it up. And, we've been talking about how the way that they've set this up with the Fed, they've forced basically these regional banks are folding, and they have no sympathy for them. They show up, they have Jamie Dimon and their buddies show up to buy the assets on the cheap. Secretary Treasurer, the 77th, Steve Mnuchin, showing up last week with $1 billion with some other investment banker buddies to bail out New York Community Bank. So the banks are still going insolvent. Retail's out of money. Where's the money come into crypto? I believe that it's, still coming in from Wall Street. BlackRock's still buying above 70,000 along with the rest of the gang. And so Wall Street's still driving this thing up right now for Bitcoin, and the broader space is getting drug along with it. Unfortunately, I hate to be that guy, but I want to make my warnings very clear and make sure everybody understands where I think we're at. I think that there's a little bit of juice left in this thing before we do have a correction. Okay. And that's just because I said that we're running out of liquidity. We're running out of money to throw at this thing. Yes, there is Wall Street demand that's coming in, that's already came in. How much more pent-up demand is there? Has the pent-up demand for Bitcoin exposure been fulfilled? I believe that it has. I believe that it really has. I mean, you have a few laggards that are coming in, but most people don't like buying assets at all-time high, which is exactly where we're at with Bitcoin. Now, what I love to see is this right here. This is starting to backfire, and it cracks me up because they've added now the super core. So, you got headline CPI still hot at 3.2. You got core still coming in hot at 3.8. Both beat expectations. Both beating expectations. But then you look at their new metric, super core. On a 3-month annualized basis, super core inflation jumped a whopping 6.9% in February. Now, that's a little ways away from 2%, isn't it? And the funny part about this is super core strips out core services less shelter inflation is a key metric that the Fed follows, also known as super core inflation. So core removes food and energy. Super core removes shelter, used cars, and everything else that matters. And it's still coming in at 6.9%. In January, this metric jumped by 0.7% month over month, the biggest jump since September of 2022 when inflation was peaking. In February, it was up another 0.5% month over month after multiple increases in 2023, all while real wage growth is turning negative again. That's why I'm saying it's a recession. It's a jobs recession, and it's a Main Street recession. Wall Street's still partying. The fight against inflation is far from over. Yeah, even when you use the Fed's new numbers, and this is an absolute joke. Any inflation data point that removes food, energy, shelter, used cars, is, I would say, worthless, right? We could probably just throw that data point out the door when it comes to making a real investment decision. And when it comes to actually, making sure that our families are going to be able to survive this inflation, I like to approach with the mindset and the understanding that real inflation on anything that matters is probably 10%, right? If they're lying, and by their old data points, how they used to track inflation back in the 70s and 80s, and even up through the 90s, inflation would be double what it is right now. So the 3.2% would actually be over 6% inflation. And I just argue that maybe let's just round up to 10% just to make sure we're covered. And I'm going to talk about this more towards the end of the episode when I talk about how we have to approach investing and specifically how I am investing in what is a bull market that's simultaneously taking place at the same time that we have entered a recession. Now, it's not a technical recession. Remember, GDP is still going up. You guys let me know in the comments down below if you feel like our economy is growing or if they're just charging more for the same products and services, leading to a higher GDP. Now, despite all of our issues, we find another 300 million in weapons to send to Ukraine. And we wait for the March 22nd looming shutdown for the U.S. government. We already did have Biden pass a bill, 400 billion. Yeah. Can't get confused between the millions and the billions and the trillions. 400 billion added, a funding bill that basically funds part of the government through September. Doesn't even make it through the end of Biden's term. And we also see that parts of the government will shut down on March 22nd if we don't get another funding bill part. So we only got part of the government funded for 400 billion. That's how big of a joke this is. 400 billion only had a few departments funded until September. That's how stupid this is. And this is why I dropped the video earlier today. Biden wants to introduce a 30% excise tax on Bitcoin mining. But despite all that, we still find money to send to this program over there in the Ukraine. We find money for that program. And according to CNN, the U.S. economy is so strong that there might not be any rate cuts in 2024. Now, this is interesting because they want to tout this as a strong economy for political reasons, but at the same point, the data, if you actually look at it, is terrible. It's actually really bad. And so this is why it's just hilarious to watch the hypocrisy from them. They want to manipulate the data, twist the data, and flip it around to make it sound all rosy and sunshine and rainbows. Meanwhile, right, we see that the only thing that's been hot, the only thing that's been good has been inflation and the markets, a period of stagflation, which absolutely decimates the middle class and poor. That's why there's so many people frustrated with this administration, with this government. It's not even political. It's straight, the economy stupid is what it always comes back to. And there's going to be a huge backlash if this continues at the current trajectory. And if the Fed doesn't cut rates, the market's in for a bit of a adjustment to be made. Definitely real estate reset. We've already noted how that's underway, and that's going to continue if they don't cut rates. And I've been making the case that they're not going to cut rates until something breaks. And in fact, I believe that that's the agenda, that's the plan, is to let it break. Let some small regional banks be sacrificed. We get to come in and be the good guys and save the day with Janet Notel and Yellen, Jerome Powell, and all of our buddies. Maybe Gary Gensler, he's making so much money for, Gary Gensler has billions of dollars to collect from the cryptocurrency space that he's launching his crusade against. And so the gang is just living well, protecting us, protecting investors, and, They continue to tout this. The talking head pundits, CNN, saying that the U.S. economy is so strong that there might not be any rate cuts. Well, the market, remember, was trying to bet on 7 rate cuts taking place this year. This is the same market, which, by the way, this market is delusional if you can't tell. The same market forecasters that expected 6 rate cuts last year in 2023, and we got 0. And they expected one, in January, didn't get it. They expected one in March, didn't get it. And now with today's news, the markets are betting and pushing this out even past May and June into potentially July. Basically saying that the first half of this year, we ain't getting rate cuts, which going from 7 rate cuts all the way down to now the market only expecting maybe 3 to 4. It's better. But I think that what markets and what CNN's not saying is that if we are going to get rate cuts, and by the time the rate cuts come in, there's going to be a lot of people bleeding in the streets financially. That's the problem. All by design. And just look at this. This is the headline from Wall Street Journal right here, folks. You have core inflation 3.8, overall inflation 3.2, but they say inflation uptick unlikely to derail Fed cut later this year. So on one hand, we have CNN saying that the economy is so strong that we don't need cuts. And then on this one, they're saying, don't worry, guys. Daddy Powell's going to take it easy on you guys here later towards this year. Don't worry. Hang in there. You're going to get that Fed rate cut. Yeah. And what they don't tell you is that it's after there's blood in the streets. Speaking of a little bit, now Market Watch, they're saying, don't worry, guys. It's only going to be a little bit of blood in the streets. Global stocks are headed for a correction, but the pullback likely won't snowball into a bear market, Ned Davis research says. So they are desperately trying to keep that sentiment high. They're trying to remind everybody that this market has, climbed so well and that everything's going to continue on, everything's going to be a-okay. But I thought that this post right here put it together really well from Finance Lot. When the talking heads tell you diversification will save you, they're lying. $5 trillion in money printing was intended to cause this bubble and concentrate it. They knew it and planned it. Now the Fed and elite are cashing out as they've coordinated the collapse after a 14-year economic cycle. Now, this is exactly what I've been saying as well, right? About this concentration. There is no breadth in this stock market. You have a Magnificent Seven and a few other stocks that are doing really well. And in this environment with inflation still running high and rates running even higher, these AI companies are doing fine, and a lot of them are sitting on a lot of cash that they're rolling over short-term T-bills, and so they're generating a nice little healthy 4 or 5% on their T-bills that they just keep rolling on over and over. And let me take a sip of my coffee here, and we'll continue. God bless you all. Thank you for joining me today. Got myself a nice fresh black cup of coffee. No creamer today. It's the evening coffee, no creamer needed. Now, and this is where what goes up can also come down. They don't even acknowledge that. And we're starting to see it. You know, we are the market for stocks did go back up here today. And like I said, the bull market continues, even though we are in a broader recession. But they have concentrated this wealth all in their own stocks that they're cashing out of. And we're talking about Google, Microsoft, Amazon. You've seen Zuckerberg. They're cashing out and building bunkers. And, you know, this is where we're at in a cycle where you got folks that want to play around with Mickey Mouse meme coins. Meanwhile, Warren, the Oracle of Omaha Buffett, is sitting on $167 billion cash. You know, and kids want to play games out here with their money, with their allowance money, chasing meme coins and stuff. And God bless them. I hope everybody makes money on memes. That's awesome. But then after, you might want to have to, you know, consider finding some real fundamental value. And this is why Warren, I believe, is sitting on so much cash right now, is he can roll over those T-bills. He can generate that yield from that. That's fantastic. But he's staying liquid to buy the correction that is coming. And I believe that all of the elite know what's coming. I think that they all know that it's one big facade. It keeps on expanding right now. But this expansion that we've seen right now has finally surpassed the dot-com bubble as far as the level that this bubble has blown up to, right? So we've officially surpassed the dot-com bubble. And as I continue to highlight, all of our data points take us back to the rallies that we saw right before the great financial crisis, right before the dot-com bubble, right before the 87 market crash, right before the 29 market crash into a Great Depression. And so how bad is it going to be for us? Well, I believe that we get a similar event to 2020. It breaks hard, it breaks quick, but we get a V-shaped recovery because Powell's going to come in to open up Pandora's box. And this is what we got to keep in mind, right? Yeah. You got to protect yourself against the downside, but during this moment where inflation's still running hot, the price of assets is going to continue going up, and so you have to have some skin in the game, but then you also have to be hedged on the defensive side. More on that later. Mining icon Ross Beatty is warning that in the last 15 months, gold and gold equities have just disconnected. Ross is 100% right. There's a significant disconnect between the spot price and the miners. Focus on safe jurisdictions with high-grade systems. The time is coming. And they're talking about focusing on safe jurisdictions with high-grade systems for mining stocks and investing in those types of companies, which I am taking a look at right now. I have not invested in any yet, but I see the same divergence. And what's driving this? Well, folks are selling off gold ETFs and they're going into Bitcoin ETFs. They're going into tech. They're going into other investments because they're gold and other precious metals like silver. These have been just decimated. These have been just beat up. And even though gold is going back to all-time high, gold equities is not staying with it, which actually is a huge indicator of what's driving this rally. It's central banks buying and large institutional buyers that aren't buying the ETFs. They're not buying the equities. They're putting gold in their vault. Now, if you guys need any precious metals, you guys know I have all of my community resources available at my website, zachrector.com. So if you're looking to get metals shipped directly to you, we can facilitate that. Or if you have a 401k retirement account, we also can roll them on over as well. And I'm going to be researching, I've already started the process of researching the potential equity investments in the mining and commodity space, because I think that eventually this thing does catch up. And I'm going to share more later too on investing in a bull market while we're also in a recession. I'm going to share more on this later. But one of my biggest takeaways from the Vancouver Resource Investment Conference was listening to Rick Rule talk about how Ross Beatty, absolute legend in the mining space, Rick had invested in, Ross Beatty had 14 companies that put out over 10x returns. And Rick Rule invested in 10 of those. But every single one of those investments went down 50% before it went up 10x. And I took that home with me and I said, this is exactly how I feel about some of these fundamental plays, that we've been making in the digital asset space, where, yeah, you could take and get the bag cut in half, but on the upside, we're looking at 5, 10x and beyond. And to be able to ride these investments down, to be able to go through a bear market like we just went through, you have to understand the fundamentals, right? You have to understand your conviction in the investment. And I'm going to talk more on this later, but that divergence that you're seeing right now, I believe that that's going to eventually catch up, because we see the commodities to equities ratio completely out of whack, overextended to the equities. And I think it's going to come back to the commodities. And when you think of the potential to get an investment in these companies that are still cash flowing, still have tremendous cash flow, still have great balance sheets, these miners have been paying down debt, but they're also mining and extracting and working and getting out an underlying asset that has been suppressed as well in the case of gold and silver. This is why that investment opportunity excites me. And I've been looking into that a little bit more heavily ever since I went up to Vancouver again for the second time. Now, as we've been mentioning, you're seeing a flow out of the gold ETFs, out of the silver ETFs, out of the commodity ETFs. And where's it going? It's been going to Bitcoin. This Bitcoin ETF continues to grow. We do have buyers above 70,000, and it's BlackRock and Fidelity, which now hold 331,000 Bitcoin, worth over 23.4 billion for their spot Bitcoin ETFs. And look at Kraken Exchange getting all hype. The institutions are here. Do you have enough Bitcoin? Anon. And I noted how yesterday's show talked about how Kraken put out a tweet about how, this year is going to be massive, and how Brad Garlinghouse had liked that tweet or something like that. And so they're here. And look at this amount of the supply, right? Over 331,000 Bitcoin. And this is the thing. The fundamentals for Bitcoin are fantastic right now, because you have Wall Street that basically can only get exposure directly right now. Primarily in basically a spot ETF only has Bitcoin as an option. Obviously, as more ETFs come available, you will see the diversification in that obviously coming in. But for the meantime, it's not there. And so the fundamentals are there now, and it's driven us up to this point to 70,000. And like I said, you got Wall Street buying, and you also have Michael Saylor buying. And I wanted to share this with you guys, because this is, the kids are calling this an infinite money glitch. And we're talking about Michael Saylor's little strategy here with MicroStrategy, his company, right? Where he continues to print new shares, issue new notes, senior notes for his company. He's issuing debt, and it is convertible to cash or Class A stock. And basically, he has raised another $800 million offering of convertible notes at a 62, not even 1%, right? 0.625% coupon and 42.5% conversion premium. So not only are you getting very little yield on this note right? This loan that you're giving MicroStrategy, you're getting a very small yield and you're paying a premium, right? But he's able to convince folks to do this, and he's got another 800 million that they just converted and or that they just raised for convertible notes. Okay. And these aren't due until 2030. And basically, the kids are calling this an infinite money glitch, and the Bitcoin bros are just salivating over what Michael Saylor is doing, is saying how he's going to have the most valuable company in the world. And the reason why they're doing this is because he's printing these shares, which dilutes you as a shareholder, but he's using that to buy more Bitcoin. So you're getting more Bitcoin per share, but your shares are being diluted. Now, this will either go down in history as one of the best investments ever, or it's going to go bust. And I don't want to call it a Ponzi scheme, but we are going to see how this one plays out. It's going to go down in history one way or another, because the bet that he has been making, he keeps on raising these funds and convincing investors to invest in these convertible notes. And they're doing it. And he's turning right around and buying more Bitcoin. But you got the Bitcoin bros and investors in MicroStrategy as well that are just eating this up. And they're calling this the infinite money glitch. That's what they always say in every good... I don't want to call it a Ponzi scheme because I don't want to be disrespectful. But and I don't think that we can qualify it as a Ponzi scheme just yet. But we'll see how the program works out in the long run. It's going to go down in history one way or another. And I wanted to bring this up because we are also seeing that Coinbase has just now proposed a private offering of 1 billion of convertible senior notes due in 2030 as well. And so I don't know what they plan on doing with this offering, right? They're doing the same thing, but I don't know if they're going to try to roll this on into more Bitcoin or what their plan is for this. But we do see that Coinbase is doing the same type of deal, convertible senior notes due in 2030. So that's going to be interesting to watch. But the problem is this next tweet right here, Samantha Leduc. Be careful who you worship or what you wish for Bitcoiners. Michael Saylor hoarding a commodity of limited supply is not safe for hodlers of Bitcoin just because price is rising. Consider the risk. Michael Saylor is a modern day Nelson Bunker Hunt. Now, if you guys are in precious metals, you know exactly who we're talking about with the Hunt brothers. The famous Hunt brother from the 70s who believed inflationary pressures would destroy investments denominated in paper currency, fiat. The Hunt brothers tried to hoard silver to corner the market. This lasted a decade. During the 1970s, the Hunt brothers purchased most of the physical silver inventory available on the market using leverage. Silver was above $2 per ounce when they started. By March of 1980, the brothers managed to drive the price of silver to $50 per ounce. But by then, the Hunts were no longer able to borrow the money they needed to keep buying silver and pushing up the price. Uncle Sam stepped in. If I recall, JP Morgan helped. The same JP Morgan that's manipulating the markets to this very day. The Hunt brothers eventually had to start selling, and the ensuing panic caused the silver price to collapse. March 27, 1980, Silver Thursday, the Hunt brothers missed a margin call and the market plunged. Silver crashed to under $11 from its high of $50.42. The 1988 Nelson Bunker Hunt and William Herbert Hunt declared bankruptcy. So, suggesting that the consolidation here might be a problem down the road. What's interesting, though, is, whether it's Michael Saylor or whether it's BlackRock Fidelity, right, they've already acquired almost 2% of the total circulating supply of Bitcoin just between BlackRock and Fidelity. And so they're eating this asset up. And Michael Saylor's program, we'll see how it works out. He's going to he'll go down as a legend one way or another. It's either going to be the best thing ever, or it's all going to go bust one day, just like it did there. And as I highlighted in the video earlier today, you have the government stepping in. They're trying to issue a 30% Bitcoin mining tax, even if your Bitcoin mining comes from renewable energy. This isn't FUD. This isn't me making something up because I'm trying to FUD Bitcoin. No, I want Bitcoin to win. Rising tide lifts all boats, so that's good. But for Bitcoin, this is a problem. You have the Bitcoin miners, which are going to get half the reward after April 20th when we get the Bitcoin halving. Their reward gets cut in half. So their profitability is, their earning potential is going to be cut in half. And you tack on a 30% tax. Now, the miners in the United States had actually grown substantially after China banned mining. The miners here in the United States have been growing pretty well, and we brought over quite a bit of mining, and we have some large mining pools, taking place here in the United States. But this could change. I mean, it's absolutely crazy to think that they want to be able to tax it, even if your energy is coming from renewable energy. You got to do an estimate of how much energy cost, you would be paying, and you're still going to have to pay a tax. 10% in the first year, 2025, 20% in the second, and 30% tax, and from there on out after the third year. Now, this is all assuming that Mr. Biden is going to get another 4 more years. That was his fiscal budget proposal. So we'll see how that one plays out. Now, let's continue on here. We have this one into Ripple XRP news. Ripple partner Tranglo will expand into Europe via InPay's instant SEPA connections, and InPay will reach to Asia. Tranglo will offer multi-currency cross-border payments to B2B and B2C customers. Tranglo is an ODL XRP user. And what we're starting to see is these partners that have already started using on-demand liquidity, they're firing up the ODL in new jurisdictions. Okay. So we already do have a few ODL users in Europe. I know we have France and Sweden. We have a couple users over there for ODL. And then we're starting to see now in Europe, we're getting a few more. And then obviously we've been doing really well in the APAC region, Asia Pacific. And we continue to see that. Middle East and North Africa continues to grow really well. And so the progress is just fantastic. And as we continue to note, Ripple partners just seem to be positioned so well, right? While the rest of the space is in contraction, while the rest of the space is shutting down, these companies are going bankrupt and bust. The Ripple partners are, expanding, making acquisitions. And we just see growth. It's like, this is why we say, show me your friends and I'll show you your future. You surround yourself with the right folks, you get on that right trajectory. That's why community is so important during times like this. In an upside down reality, having a community surrounding you with the same mission and goals, objectives, at least going towards the same direction, right? That goes a long ways. And that's what you're seeing with Ripple partners. And we've talked about how XRP is what allows them to have a competitive advantage. When you start to use XRP, you are going to remove some of that friction, of course, and that friction's where they make their fees. But we're in a battle right now, a race to who can provide the lowest fees. Same thing's taking place with the Bitcoin spot ETFs. Who can provide the lowest fees? I think Fidelity just waived all fees for the rest of the month. So this is how desperate they are to keep assets under management. Right? And this is going to be a battle between PayPal, Venmo, and these other jurisdictions. You got, money remitters, remittance companies, and like Tranglo and others, right? And it's a battle to keep your business. As we move towards little to no fees, it's a battle to keep assets under management, deposits in the bank, activity and flow still coming through your institution. That's what this battle is now over. And as we've highlighted in the past, XRP gives them that competitive advantage. And so tremendous to see. And remember, this is just the payments use case and utility for XRP. When we add in all of the additional DeFi that's now coming to the XRP ledger, right? We have the utility trifecta with the AMM set to go live here in 10 days. With the cross-chain bridge, which gives us interoperability with any other blockchain. And then we get XLS40D decentralized identity. It's the trifecta right there of utility. And that's just the start. We also just got clawbacks. We also are looking at getting price oracles coming up here soon too. And this is what I'm talking about as far as getting DeFi cooking for the first time ever on the XRP ledger. We've had payments, and you can see that Ripple's, having tremendous success in the payment space, despite what some people want to say, despite the fact that Ripple has admitted, David Schwartz has admitted that they haven't had as much progress as they would like. They still have tremendous success. They still are having expansion. they've gone from just a couple hundred partners to now over 500 partners. And over half of the liquidity is now flowing through ODL. And they're starting to move ODL to the XRP Ledger DEX. And I'm so excited to watch when this AMM goes live and we can start to see what Ripple is going to be doing with their on-demand liquidity partners. I'm very interested to see if they start to move some of these flows to the AMM liquidity pools. And I'm talking about a Tranglo who's going to issue the Philippine peso on the XRP ledger, and Ripple is going to add a billion XRP, and Tranglo is going to add a billion or a couple billion worth of Philippine pesos issued on the XRP ledger to the AMM. This is what I'm waiting for the AMM. This is what I'm most excited for, is to be able to follow that, because this is what I'm looking for on the AMM. I'm going to be dropping more content, and we got a call coming up in our Discord group that's going to be on the DEX and on the AMM for the XRPL. We're going to be doing that in the next week or so. But I want everybody to get familiar with the DEX, because what I'm looking for, the opportunities in the AMM, specifically what I'm going to be watching for is Ripple and their ODL partners. Are they going to start adding assets to these liquidity pools? And can we just ride their coattail and add our assets to the same liquidity pools, right? So that we can know that we're going to be in a liquidity pool that's not going to get drained of liquidity, right? Basically, Ripple and their ODL partner could add it to that pool, and that liquidity is just going to keep on growing. They're not going to pull that down, right? This is liquidity flows that, say for example, that they're moving $1 billion per year. As soon as they move that over to the AMM, right? So, and this is just a hypothetical, right? For example, right? They move that $1 billion of liquidity on a yearly basis, right? They move that over to the AMM. That sets kind of a floor of liquidity, and then it just gets to build up from there. And me and you can see that. Oh, wow. Tranglo's issued Philippine peso on the XRP ledger, and we can add Philippine peso, or we can add XRP, right? Now, you got to understand the risk. This is not going to be get rich quick. This is not really going to be get rich. This is start to generate some yield with your XRP and your issued assets on the XRP ledger, your other XRPL tokens, right? And what we need to see is more legitimate issuers coming to the XRP ledger, like Circle issuing USDC on the XRP ledger. That would be massive. And what I've done on the Stellar Network AMM is I added Stellar XLM with Stronghold to that liquidity pool, because it's a hedge between the two assets. So they go up and down, and they have volatility, and they fluctuate, right? But as long as you don't really mind holding either one, and you're just holding it for the long term, you continually just add more and more of those assets to your bag, right? Now, when it gets out of whack, and where you miss out on the upside is if you get a huge push up in price, the function of the AMM is you're selling all the way up, right? So XRP versus US dollar, XRP goes crazy. You're selling XRP all the way up. You're providing that's liquidity that you're providing, right? And you're going to have to wait for it to come back down into balance, right? For more USD to be added, and then it comes back into balance, and then you've acquired more of both assets. And so I'm going to be doing a lot more content on this. Make sure you guys subscribe, hit that notification bell so you don't miss any of our updates. We got a lot coming our way. This is going to be a massive week. And then we got the AMM coming up in 10 days. Private session going to be, private class going to be taking place in our Discord group as well. But I encourage everybody to get familiar with that DEX. Now, I wanted to share just a little bit of XRP technical analysis from Dark Defender. Don't shoot the messenger. I'm just sharing this one person's perspective. This is some exciting stuff if it does play out. And it's going to lead me into how I'm going to conclude today's live call by talking about how I am investing in a bull market that is taking place simultaneously during a recession. We got to understand this. And so Dark Defender shares an update on XRP. We had the breakout yesterday as we expected. In the monthly time frame, it is obvious the move has started. The huge resistance of 66.49 is broken in the daily and confirmed. 6649 will be confirmed for the weekly and monthly frames. Our targets are closer now to 133 mid resistance, $1.88, and $5.85. He should, is he sure that that's not 589? He better go back and check that, Dark Defender. By the way, Dark, I do have my coffee with me. Thank you very much for the TA update. I got myself a nice cup of coffee here. I think we're going to maybe stretch up to 589. I don't know about that 585. But he says up to 585 Fibonacci target in the upcoming weeks. Folks, don't shoot the messenger. I'm just sharing one man's perspective. This is interesting. Expect solid strikes. April will be hot. Have an excellent day. I'm having a fantastic day. I loved seeing what we got yesterday. I think that was a glimpse of what could be coming, and he's showing you right here that the next wave up in the coming weeks takes us up to that $1.88 and beyond, and he has a fib up to the 585 level, just shy of the 589. What do you guys think about that? Let me know in the comments down below. Now, this is a difficult task. And when you understand, the economy out here, how hard it is to even just save up, get to the point where you have excess savings to be even able to invest, right? It takes a lot right now with the cost of everything and inflation. As we noted here earlier today, inflation's still running hot. So this is why at first we got to talk about income. It's the number one thing that we got to focus on is bringing it in. You will not be able to save your way to generational wealth. Okay. You will not be able to save your way to any wealth. Okay. And in fact, you might not even be able to survive what we're going through with savings alone. Okay. The problem is that we need to make our money work for us while we're sleeping, right? While we're not working. We want to put it to work. Don't dare call the XRPL AMM passive income. God forbid. Everybody's getting their panties in a bunch over that one. Don't call it passive income. Okay, well, you're putting your assets to work in a decentralized way where I'm not having to break a sweat. That's about as passive as it gets to me, right? As someone who comes from knowing what it means to work hard. That's about as passive as it gets. I mean, that's pretty dang close, okay? But let's not get lost on the technical nuance, okay? We don't need to confuse the facts. Just tell me where the damn opportunity's at. Some of these guys just want to go back and forth in circles all day long, arguing technical nuance. Do you even have a program? Let's figure out a program. Okay, I get it. Where's the opportunity at? And that's what I'm here to share with you guys here today. So I'm speaking for myself. I'm not here to give anybody financial advice. Let's be very clear about that. Please, this is not intended to be financial advice. I am a 29-year-old who can take on a lot of risk, who can make asymmetrical bets where, yeah, I might have some downside, but I have tremendous upside opportunity. And so that's what I continue to look for in this market. I'm looking for I'm still a fundamental value investor, okay, who is looking to dollar cost average into my fundamental positions that I feel very, very solid behind, but then also looking at hype momentum trades. Nothing wrong with it, in my opinion. I just made a trade out of the SEI token. SEI was the ticker. SEI. I mentioned it a few times on the show. And this is very, very important. Because in this market that is irrational, that is upside down, in a reality that doesn't make sense, we need to understand why we are making these investments. What is our expectations, right? And so we need to understand the difference between hype and fundamentals. Are we buying a token because we're going to keep it and use it for DeFi, and we think it's a reserve currency like XRP? Or are we buying a token because we want to buy it low and sell it high? Be honest with yourself. Don't lie to yourself, okay? Be honest with yourself. And that's exactly what I did with the SEI token. Not only did I, know with my own research and my own understanding and my own investment thesis on SEI that when I bought it, it was a momentum play. The coin had already gone up significantly. Now, the coin did have fundamentals. It does have fundamentals still to this day. I'm actually still interested in the project, and I'm considering buying back in potentially. But I knew that when I was getting into it, that I was making a momentum play. I was trading momentum. I understood that there was a little bit of fundamentals. And I shared with my community, I shared with you guys that, hey, there's this token that I've gone into. There's a little bit of fundamentals, but there's also a lot of hype. There's some momentum behind it. And of course, it has memes. Say comes from Saiyan. Super Saiyan is from Dragon Ball Z, which is a show that was a kid. When I was a kid growing up, we watched Dragon Ball Z, a Japanese anime show. And so it had the memes. You got to love the memes. Like I said, make your money on the memes. That's fine. Had a little bit of hype, had some momentum, and it had some fundamentals, which I like too. But I knew when I was buying it that I was selling that sucker at 95 cents as the target that I set. I missed my opportunity to get in at about 50 cents. I'd had a couple orders that were down at 52, 53 cents. And sure enough, Say Token did come back down close, down to 55 cents. I missed my opportunity, but then it went back up and I ended up just market buying at 73 cents. And the day that I bought it, or maybe it was the day after, I had already come to the mind that I was going to be selling it off. But then I think the next day, I'd actually picked my target. Now, ideally, what I like to do is pick the target when I'm buying it, but I already knew that I was going to be selling it around $1, which was the high that it traded at the day that it was released in August. So I knew that there was going to be resistance around that level. And sure enough, it did go up to that level. I sold off at 95 cents. I took 30% profit and I took my money and ran. See, this is the thing. In this market, you have to be clear. Are you momentum trading? Are you trading and investing in hype? Or is it a fundamental investment? It's fine to do momentum. It's fine to do hype. It's fine to do memes. But don't lie to yourself. Don't go around telling because this is what I hear all day long on Twitter and all this other crap out here in the spaces. People actually sharing these narratives that are just a load of hot crap. Let's be honest with ourselves. Come on, right? 99% of this, we're not investing it for fundamentals. We're not investing it because we're going to hold the token, utilize it. No. We're buying it low so we can sell it higher. Be honest. And set your exit strategy and stick to it. And take your money and run. This is how you keep skin in the game in an irrational bull market that's taking place during a recession. So I make a few of these plays. I'm not really too big. I don't throw a lot of money at these momentum plays, but I still look out for them. Okay. So that's momentum trading, which I'm doing right now. But mostly what I continue to do is I'm investing in fundamental positions that I have real conviction about that are asymmetrical bets. What is an asymmetrical bet? An asymmetrical bet, well, what's symmetry? The same on both sides. That's what symmetry is, like a butterfly, right? And so if you have a symmetrical bet, well, you're betting $1,000 and that's all you're going to make on it. And on an asymmetrical bet, you're going to bet 1,000 and you have the potential to make 10,000, right? You have asymmetrical upside, way more upside than you do downside. For me, I'm not trying to play it safe. I have defensive measures right here. Although I think that I could see tremendous gains from this, and I do believe that this is an asymmetrical bet, I primarily stack this as defense. I'm not looking for the asymmetrical bet so much as I'm just looking for blackout barter. When systems go down, I have options, but then I consider this to be savings. This is defense. This is hedge. This is insurance. This is not in the same bucket of my portfolio as memes and momentum. Momentum's over here, and we send it on momentum with the understanding that that's the momentum side of the portfolio. The funds that I'm throwing at momentum are the same funds that I'd be willing to take down to the casino. This is completely on the other side of the portfolio. And so I have my defensive measures, and that opens me up for the ability to take on risk on some of these asymmetrical bets, which do have 50% downside, but they have 5 to 10x upside. Perfect examples, and specifically what I'm looking at is digital assets like an XRP, where, yeah, sure, they could go down 50%, but it also can go up 10x this bull run. And I'm looking at private equity, which private equity, very volatile, very risky, but that's where you have tremendous upside as well. Okay. So I'm looking at digital assets and I'm looking at private equity for asymmetrical bets that are based off of fundamentals. Okay. And I am completely disregarding bonds that are spitting out 4 or 5%, because yeah, that sounds great. Oh, 4 or 5% on T-bills. You can do T-bills for, 3 months, 6 months, 1 year, 2 year, right? Get up into long-term bonds too. Sure, sounds great. Until you realize that, the T-bills, you're going to be paying short-term capital gains tax. So not only is your 4 or 5% yield not even really beating inflation, but then you also get short-term capital gains because that T-bill has to be rolled over every 3 months, 6 months. And so unless you have it in a tax, preferred account, you can potentially reduce or mitigate your taxes in that regard. But otherwise, for me, I don't have... I don't have a Roth IRA or an account like that where I can grow it tax-free. So I don't consider bonds. I don't consider stock market, because stock market, I believe, has a symmetrical bet. Yeah, you have upside that could be another 10, 20% this year, but you also have downside that could be 20 to 50%. Look at NVIDIA as an example, right? NVIDIA. Right towards the end of 2021, everything was going well, really great time, right, for NVIDIA. And then we saw that it crashed 68% at the end of 2021 through 2022. Now it's had another run. It's gone up to new all-time highs, right? And so you do have upside, especially these techs. These have gone to the upside in a tremendous way. That's fantastic, right? But you also have significant downside risk. And that's why I'm not considering the broader equity stock market as far as public stocks. These are stocks that I think have already been overvalued. They are currently overvalued. They are overbought. There's no breadth. This is why I'm not looking at index funds. I don't want an 8 or a 10% return. See, I am going for protect my wealth, protect me, hedge me, have me some insurance, have me some blackout barter when the systems go down. I still have something to transact with, and I don't just have this precious metal, I have some other precious metals as well, if you know what I'm talking about. And I don't just have freedom seeds, I have real seeds for my garden. Okay. And I also have other essentials and other food, and I keep my options open. That's defense. But then when it's time to go make some money, I don't go trying to make 10%. I go try to make 10x. My most recent installment of our business development program, I shared how I just got a 40x return on my paid ad campaign. That's a successful marketing campaign. That's a nice little investment. 40x. Is anybody getting that in the stock market right now? No. Are folks getting that in crypto? Well, yeah, there are some. So my 40% ROI on a paid ad marketing campaign, maybe it's not as sexy as trading meme coins, but I can repeat it. And this is what I want us to focus on during a bull market that's taking place during a recession, when we're in an upside down reality, is focus on fundamentals and focus on a program and a strategy that can be repeatable and scalable. That's what I'm doing. I'm not here to tell you what to do. I'm sharing what I'm doing. I protect myself. I hedge myself. And the other thing, guys, is cash. So not only have we been stacking precious metals, but cash, because I want to stay liquid, just like Warren Buffett. Like I said, the kids are out here. Hey, man, is now a good time to invest in bonk? The Oracle of Omaha is sitting on $167 billion cash, and kids want to know if it's time to invest in Mickey Mouse coin. You know, and so this is why, sure, if you want to trade momentum, if you want to trade overvalued, if you want to trade hype, understand that that's what it is. Don't sit here and tell me that you can actually justify the valuation of NVIDIA, okay? Thank you, but I'll pass on whatever you're smoking that's getting you to that valuation for NVIDIA. I will pass on that. Thank you very much. Okay. Let's not lie to each other. Okay. But sure, play it, ride it, have fun with it. I hope it works out. For me, I continue to say that XRP has some of the best fundamentals in the space, and the fundamentals just continue to get better and better from my perspective. The other asymmetrical, the other area where I'm looking for asymmetrical bets, which pose incredible risk, you know, like I said with the Ross Beatty example, Rick Rule invested in 10 of those companies, And he rode all of them down 50% before he got 10Xs out of every single one of them. That's what I'm looking for, right? And it comes to finding value in a market that is been distorted. The perception here that we can actually trade at 100 times P&E ratio, price to earnings, that we can trade at 50, 100 times price to earnings, and beyond, right? And so I mentioned earlier that for me, and that's all I'm speaking on, I'm not here to give anybody financial advice. It's just a matter of understanding, because a lot of folks are confused about the difference between hype and fundamentals. And they're confused about, is a project running because it has hype or because it's having real adoption, real partnerships, and real growth. And like I said, if you can make your money off the momentum plays, that's fantastic. But you have to understand how much risk exposure, how much risk tolerance you can expose yourself to. See, I can do some momentum trades. I don't spend too much time researching memes, but I can trade some momentum. I don't mind doing that because I have risk tolerance. I'm a younger guy. I got time to make it back. And I can make a lot of asymmetrical bets because I can take 20, 50% hits and not blink and go buy more. Okay, because I haven't overstretched myself, which is very important. Like I said, we got to make sure, the first thing is make sure that we're making as much income as possible. And we want to be able to generate, an extra stash here for investments. But staying liquid and staying solvent during this recession is going to be important. Okay, because the worst case scenario is you get these hits and you have to sell off these positions at a loss before you can ride them back up. Positions that you have conviction in, that you believe in. And so that's really all that it comes down to right now in a bull market that's taking place during a recession, is continuing to try to find value and understanding the real difference between hype and fundamentals. If you guys appreciated this session, please like this video before we make the exits. I just want to remind everybody that all of our community resources are available at my website, ZachRector.com. If you're new here, make sure you subscribe, hit that notification bell. We're dropping content on TikTok, Twitter, and YouTube. And please watch out for the scammers, folks. The scammers are running rampant. I will not send you a direct message, period, full stop. It's not going to happen because these scammers and impersonators are basically trying to take advantage of our community on every single platform. So the only place to get in touch with me is through my website, ZachRector.com, and our Patreon group. Okay. So appreciate all of your guys' support. It feels so good to be back on YouTube. And we are going to be going live tomorrow at 4 p.m. Pacific, 7 p.m. Eastern. I'm going to be doing a call with Rob Cunningham, my good friend Jimmy Valley, and we are going to be with Echo to Truth, Maya and Chris from Fruition Productions, and Ethereum whistleblower Steven Narioff. So that one's going to be taking place tomorrow at 7 p.m. Eastern. Make sure you guys, I think it's going to be taking place on Twitter. So make sure you guys subscribe here, follow us over on Twitter and TikTok, and everything else can be found at my website, ZachRector.com. I appreciate everyone for stopping by. You guys go have yourselves a good evening, and we'll see you tomorrow with some more content. God bless you all.